My ecomm sellers, do you actually have to collect sales tax? The answer is it depends. This is because you're only obligated to collect sales tax if you have a nexus in the state that your customers are purchasing from. Now, what is a nexus? A nexus basically just means a connection to a state. And there's two ways that you can achieve this nexus, either physically or economically. A physical nexus comes from having a physical presence in the state. So this can include offices, inventory, business partners, employees, and so on. All of those constitute a physical nexus. So let's say, for example, your business is registered in Illinois. Then technically you have a physical presence in Illinois, meaning that anytime an Illinois customer purchases from your online store, you have to collect and remit sales tax to the Illinois Department of Revenue. An economic nexus comes from passing a certain sales threshold in a state. For most states, it's either 200 transactions or over $100,000 worth of transactions in the prior calendar year, but you can do a quick Google search since this number can vary state to state. So in this case, if you're based in Illinois, and let's say you have no physical presence in Iowa, for example, but in the past calendar year, you had over $100,000 worth of sales to Iowa customers, technically going forward, you would be required to register for an Iowa sales tax permit and then start collecting and remitting sales tax from Iowa customers going forward. So this can definitely be pretty confusing, especially trying to do this by yourself. That's why we recommend you use a software like TaxJar that can basically sync up to your sales channels and keep track of all of this sales tax on your behalf. So I hope that answers all of your questions. If you have any more, drop them in the comments below, and I'll see you next time.